Hey everybody, Boris from Speaking for us. Welcome to the crosses section for May 13, May 17, 2019. A couple of interesting ideas on the cross side, and you've already sort of pre-heard my really strongest pitch of the week, which is the Aussie Kiwi short. I like this trade from every angle. I think there's going to be negative Australian employment data, so there's going to be relative strength to that point. Any kind of further intensification on the US-China problem is going to affect Aussie more than Kiwi, and the technicals look much more negative than any other cross. So I kind of really like this. I'll show this to you in the charts in just 1 second. Euro yen, my second idea, which I also like. This is really a contrarian play in a sense of, or not even contrarian play, because Aussie Kiwi is not really a risk-off play. It's much more of a negative Aussie play, period. Aussie Euro yen is really a trade on a counter short covering rally and risk. Basically, the idea is we've kicked the can down the road for about a month in the US-China trade negotiations. Equity markets seem to be relatively benign. We had a pretty decent close, actually, technically, in Euro yen. Nice big turn candle. That provides scope for a run all the way up to the 124s. So we'll take a look at that as well. And then just kind of to off balance or to offset the positive risk on idea, we can trade the Euro Swiss to the downside with 114.50 resistance, 113 support right now. It's really not even so much a risk off trade, in my opinion, about Euro Swiss. What's interesting here is U.S. yields. U.S. yields have really compressed in a 10-year significantly. We're below 250. We're at 246. And ironically enough, in FX, everything is a relative yield trade. So let me just sort of show you what I mean. So we are, we're at 246 on the on a 10-year right over here. If we compress further, even though U.S. rates are much higher than Swissy rates, because they're obviously Swissy rates are negative at this point, the compression in the spread is negative to the carry trade. And what you saw Friday, and what I think you may be able to see as an extension of all of this, is dollar getting weaker against the Swissy than against the euro, as the carry trade on dollar Swiss sees a little bit more of an unwind and perhaps a reallocation. So it's worthwhile to take a look at that, even on those particular dynamics, not necessarily risk-off trades. So let's take a look at Aussie Kiwi first. And here's why that trade really looks very clean and clear for the time being. This is a massive, massive turn candle, right? So if we sort of make the assumption that there is more than a day's worth of continuation behind that selling impulse, we generally should be able to see at least 105.50, perhaps even 105.100 in that cross, as we've double topped and we look for that negative catalyst of the Australian labor data, which disappoints and then creates the whole fundamental underpinning for RBA rate cut at the next meeting. Euro yen is really as much a technical trade as a fundamental one. We were extended off the 20 SMA. This was a nice turn candle here. This was a sort of a doji buy, and then of course confirmation of the buyers right here on Friday. So there's still scope here for maybe 100, 120 points to extend towards the SMA, and that's really the trade here. Just kind of a short covering risk on trade into the front of the week. And then finally, here's Euro Swiss. Oops, sorry. Here's Euro Swiss. And actually, let me just come out of this a little bit just to show you. And you can see from the charts here that, first of all, just technically, you have a series of lower highs. It's already kind of a continuation of a bearish construct for quite a while now, from the beginning of or middle of April. But more importantly, we gave up the 20 SMA. Big turn candle on Friday, sort of, we close at the lows, can't hold the SMA, sellers having much bigger control. So there's definitely sort of support here, this 30-40 level. So that gets broken. If you can just break that, the 11300 level just is the next natural target of the shorts. There's no support here. There's really no support here till about the 1200. But the stress selling will only come if we can just kind of take out this particular downward target. So looks prime for a setup to the downside, and that's why I think it's an interesting trade as we go into the week. Those are my cross ideas. I wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.